का हो गया है। हमारे साथ आज हमारे साथ सौरभ मुखर्जिया भी थे। उन्होंने भी हमसे बात की, बाजार पर अपना आउटलुक शेयर किया और एक बार आपको सुनाते हैं, आइए उन्होंने क्या कहा था जब बाजार पर एफआईआईस की सेलिंग पर किस तरह का आउटलुक वो रखते हैं बाजार पर।
I've lived in India now for 13 years. I've looked at SBI's numbers for last 20 years, going back 20 years. I haven't seen them deliver a return on equity above their cost of equity in this century. So when they do so, we'll obviously be happy to have a look, because again, staying with fundamentals, difficult to take the money from hardworking families and say, I will take your money and I'll invest it in a bank which doesn't deliver a return on equity above cost of equity. On the other hand, let's focus on HDFC Bank. They have gained more market share than the entire private sector banking space plus SBI put together in the last 3 years. 3 years ago, market share was 7%. Today it's 10%. Add up all the private sector banks, add up SBI in the 3 years, they haven't got remotely close to HDFC Bank. Asset quality, net NPAs, different league to any other large private sector bank or to SBI. Net interest margins, obviously very good because of their famous CASA franchise. So, unless I'm very, very obsessed about short-term movements, I don't see why we and Marcellus or indeed anybody else holding HDFC bank shares out there should lose sleep. Impeccable operating performance quarter after quarter, and 3% market share gains in 3 years. 3% market share gain in 3 years. I haven't seen any bank do that anywhere in the world. That is phenomenal. At this scale, to go from 7% to 10% through COVID, through the disruptions we had, is phenomenal. 3 other aspects of the mid-cap universe where we are investing fairly enthusiastically in our Rising Giants product. 2 disclaimers. One, every stock I mention is a part of Marcellus's portfolio. And 2, my money, my family's money, my parents' money is invested via Marcellus's products in these stocks. So just to be very clear about what I'm going to talk about. So the part of mid-cap where we are getting even more excited now than we were, say, 3 months ago is mid-cap lenders. With asset quality troubles for lenders largely behind them, we are seeing mid-cap lenders post not just loan book growth, but profitability growth, which is north of 25%. So Cholamandalam and Aavas financiers, we are building larger positions there than we hitherto had done. Also ICICI Lombard, I know it's not a lender, it's a general insurer. ICICI Lombard is a stock where we're continuing to build a larger position in our flagship product, which is consistent compounders. Moving on to a second area, specialty chemicals. It's been a big favorite of ours over the last couple of years. For obvious reasons, as input cost pressures have built up, there has been margin pressure in specialty chemicals. As I just said 5 minutes back, I reckon input cost pressures are transient. The volume growth and the market share gains that we are seeing Indian specialty chemicals deliver, I reckon are more structural. So our position build up in our mid-cap products now in companies like alkylamines and GMM Pfaudler continues apace. And the third area is the IT services space. TCS, long-standing favorite, but in mid-cap IT, L&T Technology Services continues to be a company where we're building a larger position. Similar story somewhat to financials. In mid-cap IT, specialist providers who can deliver 30-40% free cash flow growth, 20-30% PAT growth are not that common. Remember, the larger IT services companies find it hard to deliver 20-30% PAT growth consistently. We think L&T Technology Services has a product suite around engineering R&D, which will give it a solid 5-6 year growth runway, and hence that's part of our mid-cap build-up.
सौरभ मुखर्जी यहाँ पे मार्केट पे अपना आउटलुक देते हुए, लेकिन इस बीच जो आप खबर देख पा रहे हैं पूरे ग्रुप के लिए सबसे इम्पोर्टेंट खबर है